All right, what's going on, everyone? Welcome to another daily review. Today, we're going to be going over the daily range for Friday, the 10th of 2025. It's NFP Friday, and it was a bearish large range day today. All right, so getting right into it, every day when we come onto the charts, we have to be answering this question: how is the open, high, low, and close influence to form the daily range? This is going to be done by time, price, and intermarket analysis. All right. These are actually the components that will influence the daily range. Now, our job is just to figure out how this will be done. All right. The first step we do to figure this out is going to the news. All right. Looking at the economic calendar for the day. So, as we know, on NFP Friday, non-farm employment change, that happens at 8:30 a.m. Eastern time. So for today, that was the only red folder news that we had today. I mainly look at red folder news. I don't look at orange folder news or gray folder news. I mainly look at the red folder news since that will really impact the volatility in the market. All right. So what do we want to look for? All right. What insights do we want to look for on our time frames? All right. The first time frames we're going to look for is the long term perspective. Okay. So on the long term perspective, we're going to look for a number of things, right? Well, we got to ask ourselves, was it a small range day or was it a large range day? All right. What key levels or what was the narrative for the day? How did price get from point A to point B in the daily range? Did price trade, lower than higher first in the daily range? Did it trade higher and then lower and then close? How did it print the daily candle? All right. And then we got to look for the environment that we're in. Okay. Are we in a ranging environment, a trending environment? Because this will all affect how the range for the day is actually formed. So for me, the long term perspective is the daily and the 1 hour. I blend both these time frames to basically understand what's happening on the higher time frames. All right. Now this is where I get my narrative. This is where I get my levels from on the higher time frame that I actually trade with. So for this week, as we can see, we've actually been trending lower. Okay, we have bearish institutional order flow. How do we know this? Well, we're actually expanding lower aggressively. We're retracing and then expanding lower. Okay. Now, what we see this week is we actually traded to Monday high of the previous week, which is previous weekly high. We closed above it on this Monday. All right. And then we displaced lower aggressively on Tuesday. Now we've been continuing with bearish candles. We had one, two, three, and this is the fourth consecutive bearish candle of the week. All right. So that's the order flow for the higher time frame for the long-term perspective. So again, you want to be asking yourself, was it a small range day or a large range day? All right, what key levels did we use? And then the environment. So for the environment so far, it has been trending. All right, that's basically the environment that we have for today. That's going to be what we use to actually understand what the order flow should be like on the lower time frames. Also, what the parent order flow is that we want to be trading with. That's going to be based off the higher time frame. So we have a trending environment. Now, if you can see on the left side here, we actually have price trading from key levels. The key levels that were used were previous daily high and then previous weekly low. Those were the key levels that were used. And what type of day? It was actually a very bearish large range day. For me, I classify large range days if the range is actually over 300 points. For me, that's a very large range day. And I like to classify that as so. So we always want to do a 3 day look back when we're actually looking to see like the liquidity levels that there are and the next closest objective that we're going to trade to, so we can actually get a picture of what's going to happen. So within the 3 day look back, we had the previous daily high, all right, which was yesterday's high that was formed, and then we have previous weekly low is the next closest objective to the downside. So those would be the levels that I'll be looking for. And on the right side here, I actually have the 1 hour chart. So on the 1 hour chart, we can see a very more refined approach to see the daily range. So instead of seeing one candle, one bearish candle, we can see more data. We can see more candles that form the daily range. So the narrative was price opens, all right, and then sweeps previous daily high in London session before reversing and expanding to previous weekly low in New York session. That was the overall narrative for the day. And that's what played out. Okay, so going on to the next time frame, we're going to be looking for the intermediate term perspective. So what do we look for on the intermediate term perspective? On the intermediate term perspective, you look for intra-range delivery and clues. So what session was the high or low of the day formed in? What were the time factors that influenced the daily candle, like the news, different open times, kill zones that we're in? Was it a New York reversal profile for the day, or was it a continuation? Do we have a London reversal, or was it like a seek and destroy day? Did we just consolidate? All right. And then what you're going to be doing is classifying swing points. So this is taught more in the 2022 mentorship in video 12. ICT teaches this on his page. So if you want to learn more about how to classify swing points, definitely go and watch that video. So on the intermediate term perspective, for me, it's the 15-minute time frame. Okay, so on the left side on this picture, we can actually see that London formed the high of the day and New York forms the continuation. How can we actually trust this? Well, if we look, we see that price traded above Asia buy side liquidity into previous daily high, and then it broke structure. Okay, broke structure by trading below a swing low, all right, after taking out previous daily high. After that, price retraces into the range and then it expands lower aggressively. Okay. And I'll go more into this large candle there. That's actually NFP candle. But basically, daily order flow is bearish already on the higher time frame. We hit a higher time frame key level, which is the previous daily high, while also taking out Asia liquidity. Okay. So once we do this, I can anticipate that the high of the day is actually pretty much in, and New York is going to form a continuation. All right. So now on the right side of the screen, we can actually see the swing points, right? We can classify the swing points. So if we look at this, we actually see we have a short-term high here. We have a long-term high that's formed. A long-term high, all that means is that price is forming a swing high at a higher time frame key level, okay? And how the long-term high is confirmed is when we actually break structure, right? When we actually break structure, we would anticipate price to retrace back into the range and print another short-term high before actually expanding lower. And that short-term high is what we're actually going to participate on in a trade. Okay. The whole goal is to get framework for our trade to actually participate, right? If we're not trying to pick tops or bottoms in the market, and this is why classifying swing points is so important, because it'll make sure that you're not just picking a top and trying to catch the top without any confirmation, right? You want to frame your stop loss at key levels where it's basically safe to put your stop loss, and where you know that if I get stopped out, I'm probably wrong. Okay. Now that's going to be the swing points that we're classifying. If you're bearish and anticipating a bearish day, you want to be classifying swing points aligned with the bearish order flow. All right. So our goal is to enter on the short-term highs, like I was saying. In the 2022 mentorship, ICT talks about this a lot, way more in depth. Video number 12. So you should definitely go and watch that, and you'll get more of a understanding about how to classify swing points, how to actually engage with that. There are other, YouTubers that talk about this very well, like T Trades. Shout out to him. There's also Braveheart. He talks about this a good amount of times. So go and check out their pages too, and then you'll be able to understand more about classifying swing points. Okay. Now, what we also look for is the volatility injections, all right, in the market and the news. Okay. So many people really think that news is random, but it's actually very predictable. To understand what news will do, basically you just got to know where liquidity is and what has happened already. All right. So when we're thinking in terms of power of three, we're thinking of accumulation, manipulation, and distribution. Okay. So accumulation is usually when we're starting the open. All right. This could be the open of a session. It could be open of a day. It can be the open of the hour. All right. But this is basically where the accumulation will start. Now, manipulation is when we actually manipulate to create the wick on the higher time frame of a candle, and we trade into a key level. This will form manipulation. How we know the manipulation is in is actually when we get a sharp reversal. Usually there will be a sharp displacement up and then a sharp displacement back down if we're bearish. Okay, which is what we see here. We trade to previous daily high, aggressively up, and then aggressively back down. That shows that the manipulation is in, and now we would look to position ourselves for the range expansion. All right. So if we look on the right here, there's actually a little diagram of what it looks like. This is how we can anticipate what's going to happen, okay? So for today, NFP News actually gave us displacement lower. Why was this and how could this have been predicted? Well, since we already took out previous daily high and traded into the Asia liquidity while taking out previous daily high, and then we broke structure, now all we're looking to do is retrace into the range and then expand lower. Okay, this is the 2022 model fractal that ITG talks about in his mentorship too. And this gives a good understanding of what the algorithm is likely to do before it expands. So in this diagram, and I got this from Braveheart, shout out to him. Basically, what you want to see is if we've already manipulated into a higher time frame level and broke structure, then what the news will do when it comes out is simply displace lower, which is exactly what you see here. All right. Now, if the manipulation hasn't already happened, then what we want to see is price actually forming that manipulation with the news. Okay, this doesn't have to be 8:30, but could also be 9:30, could also be like 10 a.m. if there's red folder news there. Then that's when we want to see the manipulation happen. And then we want to see the range expansion happen after that. So it's always key to know what has happened already. You have to understand where the liquidity is and what has already happened in terms of power of three. All right. So the short-term perspective is going to be like the last time frame that we look for and we get insight off of for the daily range. So for me, the short-term perspective is the 5 minute and lower. So what am I really looking for? I'm looking for trade setups. Okay. I'm looking for trade setups. How I could have participated, how retail is actually being trapped and induced by smart money. All right. With the market efficiency paradigm and power of three. Okay. This is what I want to be looking for. So starting out at the top left, all right, we can see that in the daily range, price actually raids a short-term high into Asia low sell side liquidity at 9:30. Okay, so we tap into this key liquidity pool, the low of Asia. Okay, with we have a short term high being rated, all right, and forming a key swing point there. And then we actually change the state of delivery. We form an aggressive movement lower and CSD, which shows us that that swing point can actually be staying in the market. So what price does after that is it displaces lower and takes out internal range sell side liquidity, all right, which is actually the low formed at 8:30, and then eventually trades to previous weekly low. On the right side at the top, we can see basically on the 1 minute time frame how price delivered. So again, we see a short-term high being taken out, which was pre-equities open, and that's usually what 9:30 does, right? 9:30 actually hunts liquidity, and then after that, you'll find some sort of reversal. So we hunt liquidity, then we reverse, then we form a deep retracement into the bearish order block. All right, then we expand lower. Now, the breaker is actually disrespected when price comes and forms a deep retracement into the bearish order block. And this is just NFP delivery because a lot of times, like ICT talks about, price will color outside the lines, but the logic still applies. All right. So it respects the bearish order block and then expands lower. And then my entry part, if I was in this trade, I would actually waited till below the breaker and then entered right at the breaker after the liquidity was taken at 9:30. I'd put my stop loss above the 9:30 high and I targeted the internal range liquidity and also previous weekly low. All right. The best trade, the highest probability trades is when you actually align the internal model with the market maker sell model that we have here with this internal range low with the external range draw on liquidity, which is previous weekly low that we're looking for. That's how you get the best setups to form. All right. So this is what the setups would have looked like if I was taking a trade today. And that's what you would have basically been able to capture from the range. And it's a high probability A plus trade. Why is it high probability? Because it's following the higher time frame, the long-term perspective narrative. You're trading aligned with that. Remember, the institutions, smart money, they trade on the higher time frames, and that's where you want to be looking for a narrative from. If you trade against that, your setups are going to be low probability. It doesn't matter if you have a 2022 model fractal, it's going to not play out if it's not aligned with the higher time frame institutional order flow. All right. So we actually have at 12 midday, which is also lunch, we have a huge retracement come into the market. All right. And this actually is done with smart money technique. All right. So intermarket analysis is a sign that a change in order flow is unfolding. So basically, it's a cracking correlation between correlated markets, which is NQ and ES. They usually move together, but when one makes a low and then raids that low and the other asset doesn't actually raid the low, then you understand that there's a cracking correlation and a potential reversal or change in the order flow is actually unfolding. So SMT forms with ES at AM session low, all right, and then it starts to descend into a premium of the overall range. Okay, so from the overall high of London to the low that's formed right at 10 a.m., that's going to be the range you look for price to retrace back into. And usually a lot of times it does this right at 12. Okay, so basically price needs to get to a premium of the range for smart money to actually pair their orders to go short again. Why does it need to trade up higher into the range again? Well, because if we think about it, if you're smart money and you want to sell something, you're not going to want to sell it in a discount. If we just think about going to the grocery store and buying something or selling something, we want to buy in a discount when it's cheap, and we want to sell when it's in a premium, when it's high, right? We want to, if we're going to sell shoes or we're going to sell different things in the market, we want to sell it for a higher price to make more profit. Smart money thinks the same way. So when at 12 p.m., we think of all the retail people that are seeing price trading lower, and they're going to want to continue to trade lower and sell the breakout, right? This is when they'll ramp it up and they'll take out trailed stop losses here, okay? And they'll actually trade into a premium first so that they can pair their short orders with other people's orders, which is counterparty liquidity, okay? Retail, smart money is pairing their orders with retail orders to actually fund their positions to then go lower again. But first, a premium needs to be built. Okay. So that's what happens here. And if we look at the right on the bottom here, so price forms SMT, then we actually get a market structure shift, and then we have a fair value gap entry that forms. That would have been the ideal entry to take, and you can target an overall premium of the range. All right. Now, this is a very good trade. You don't have to capture all the move. You can capture a piece of the move. But the reason why price goes and runs that far into the range is because they're trying to get to a premium, okay? What you're going to be looking for is a premium array. So like a bearish order block and a premium, that's what they trade to. And then price actually trades back lower into the range until the close of the day, all right? So by journaling a daily range like this, you will actually have more clarity when engaging with price and will be able to understand how to use ICT concepts within the daily range. I definitely highly suggest that you start journaling like this because you'll have more clarity in what you're doing and how to use these concepts, and you'll understand where everything fits within the puzzle. The 2022 mentorship explained how the 2022 model works, but you won't understand when to use it if you don't understand what the daily range is likely to do and how to actually use that piece of the puzzle within the overall system of the daily range. So I hope you guys found this video very helpful. If you did, make sure to like and subscribe and definitely share it with someone else. And I'll be sure to keep dropping content for y'all.